It's November 20th, JLD here, and welcome to MSTR Today and the Treasury Titans. And you're about to get a taste as to why Treasury Titans is part of this title. And nothing in this video is financial advice. Please do your own research, but please get excited because our leader, Michael Saylor, wants us to never back down. And that is back with a capital Bitcoin B. I think he's standing somewhere above the Seine River in Paris, France, if I just had to guess there from when I'm looking in the backgrounds. And he's about to go to battle. Chris says, once you see what Saylor and Strategy are doing, you can't unsee it. And my friends, I cannot, will not, and do not want to unsee it because my eyes have been opened to what Strategy is creating, to what Michael Saylor's vision is, to what Fong Li is executing upon. I am all on board this train because, as Lynn Alden says, nothing stops this train. Mark says MSTR is $185. The last time MSTR was $185, they held only 252,000 Bitcoin. Today they hold $649,870. So there are some unbelievably lucky individuals that are getting to buy Strategy at today's price of $185. That holds 649,870 Bitcoin. That is absolutely insane. Like I can remember when I was buying MSTR in the low 100s, and then it shot up to like 220, 230, like very, very quick. And I was like, oh, if it only drops back. And I remember one day it dropped back to like 189, and I'm like, I'll never see this price again. So I loaded up some more, and then of course it shot up, and eventually, was going to 300s, 400s, and even to the 500s. And I was like, oh, I could have bought so much more at 189. Why didn't I do that? Of course, you always have, regret because you can see 100%, 100 percentage in hindsight, of course. So that was just one of those things where like, wow, now we're back here. I have the opportunity of a freaking lifetime. Let's go. Thank you, volatility. Rob says, if you haven't figured it out yet, it is times like these that you buy. When the MNAV is gone, the stock is down only for months. Everyone has given up on the model in Bitcoin, not when there is complete euphoria and the stock is 540. Just saying, not financial advice. I think it's good advice. Adam says, volatility doesn't expose Bitcoin. It exposes you. And it's so true because Bitcoin is volatile by nature. Volatility is vitality. Volatility is a gift to the faithful, absolutely across the board. Volatility doesn't expose Bitcoin because it is Bitcoin and it needs to remain Bitcoin. The fact that Bitcoin's volatility is dropping a little bit is not actually even a good thing. But the volatility exposes you. It exposes me. It exposes the human mind where we just get freaked out because, our dollars on paper are worth less than they were the day before, blah, blah, blah. Adam says this is the kind of development that will enable trillions more to flow into Strategy in Bitcoin. And this is expanding access to global corporate credits. S&P's B- rating substantially expands the addressable market of our securities. So this was a post that Strategy put out, which was very awesome, this graphic here. This is where they were before. They only had access to 2.8 trillion of money. I say only, it's a lot, but it's not as big as above it. Incremental access. So S&P has initiated a B- corporate credit rating for Strategy. So this is where they are now. So they almost doubled their addressable markets. And then they're going to go to longer term adoption when they get to triple B and triple A. This is where they're going. So this is where they were before. This is where we are. This is where we're going. End of story. This is a post from Adam Livingston. Massive news for Strategy and general Bitcoin adoption with the chairman of Basel Committee Banking Supervision coming out and saying the bank's capital rules for holding Bitcoin need to be reworked. So basically what they're saying is we're going to advocate for improved treatment of Bitcoin as a capital asset under RAC and Basel frameworks. So they're going to rework and relook at Strategy's credit where they're not giving the Bitcoin on the balance sheet any credit whatsoever. And they're going to say, we're going to start giving it its credit due. It needs to be reworked. And when that happens, the ratings will go up. Strategy posts digital credit innovations. You have digital risk, you have preferred equity, you have perpetual life, you have public security, digital creation. There's a lot going on here. Rock dividends, digital capital, and then this just kind of cycles again. So highly recommend checking this out because it just stacks on top of itself: the digital capital, digital risk, preferred equity, perpetual life, public security, digital creation, and then rock dividends all on top of this. And that's why the illustrative yield is incredible. If you guys aren't following Jordy Visser, he's an individual I've been listening to for a long time. He often appears on Anthony Pompliano's show, and he has a great Substack. And the Substack that he posted the other day was awesome. The light at the end of the turbulence too. And it's a long article, so I'm going to kind of skip down to it, but I'll link it up in the show notes below. But it's a great article. The part that I wanted to get to is down here, which is Bitcoin's 2026 catalysts. There's so many great catalysts. We have the Clarity Act coming up. We have tokenization, which is scaling. We have stablecoin acceleration. These three catalysts right here are going to be massive for 2026. So people that are on the 4-year cycle, like, you're probably not listening to this show because you've already sold, you've already gone into your cave and you're huddling, you're huddling, just cozying up in your cave, I should say, until the light comes out, in 18 months or whenever it is that you start buying again. If that happens, good for you. You made the right call. For me, I think 2026 could be a great year for these reasons, these catalysts, and more. Jordy Visser thinks so as well. Check it out. I'll post this full article in the show notes below. Chris says, here's why preferred shares are a superior tool for raising capital compared to convertible bonds. And here's convertible bonds. The duration is fixed. Preferreds are infinite, so much better. Maturity risk, yes. Maturity risk, no, for preferreds. For convertible bonds, refinancing risk, yes. Preferreds, no. Flexibility for convertibles, low. Flexibility for preferreds, high. Interest obligation, mandatory. Preferreds, discretionary. Publicly traded, no. Preferreds, yes. Qualified as a ROC, return of capital. You're not paying. You're paying tax deferred. No, it's not for convertible bonds. Yes, for preferreds. There's so many reasons why preferreds are beneficial. Michael Saylor saw it. That's why you may never see a convertible bond come out of strategy again. Again, if the situations and the events are just perfect, yes, maybe they will do a big, like, $4 or $5 billion convertible bond if it's a perfect scenario. But Michael Saylor's all in on preferreds. Strategy is all in on preferreds for obvious reasons, and it's an exciting time to be a shareholder. Sometimes it doesn't feel like it. I get it, but it is. Bitcoin Therapist says, maybe the greatest post of all time. BitPain says, sometimes I pause and reflect on the fact that my entire financial portfolio is currently composed of 1, an imaginary internet Ponzi coin, and 2, the stock of a company famous for having the largest peak to trough drawdown in the history of financial market bubbles, and whose CEO is currently leveraged to the tits on the same internet Ponzi coin, which he refers to as the goddess of truth, and that I consider this a sound financial strategy with virtually 100% chance of retiring my bloodline. This had 575,000 views. And guess what? I feel the exact same way. He actually posted this back in 2024 when everything was awesome. But it's still just so true today, and I love it. This is so exciting, by the way. Dylan just posted that, and this is where I was getting to, where the Treasury Titans aspect comes in, because Metaplanet just dropped an unbelievable bomb. They know the Saylor playbook. They know the strategy playbook. Of course, they're following it in its footsteps, because why wouldn't they? It's an absolute no-brainer, and they're going to crush it as a result, in my opinion. Metaplanet has announced Mercury, our new Class B 4.9% dividend convertible perpetual preferred equity instruments. The initial $150 million issuance was allocated to institutional investors via third-party allotment and is intended to serve as a pre-IPO financing rounds. So this is insane, because 4.9% in Japan is amazing. It's not the best in the US, where you can get like 3.5% to 4% from money market. But in Japan, it blows the doors off of like the 0.5 to 1% offers that you get. So this is like a 4 to 5x improvement. And Metaplanet has simultaneously announced its new intended capital structure, with Class A being proposed to be amended in its structure. And this is going to be Mars, Metaplanet Adjustable Rate Security. So you're going to have Mars, which is Class A. You're going to have Mercury, which is Class B, which is a convertible for return on yield. It's just going to be insane. Like, this is exactly the strategy playbook, and it's so exciting. Simon came in and said, today we announced Mercury, a new Class B perpetual preferred equity, 4.9% fixed dividend. 1,000 yen conversion price, a new step in scaling Metaplanet's Bitcoin treasury strategy. So it's a $150 million placement, 4.9% dividends, 1,000 yen strike price, and it's a 1-to-1 conversion. So, love what these guys are doing. And Zinc says, this is absolutely fascinating and a must read for Metaplanet shareholders. Metaplanet have launched Mercury, a new Class B perpetual preferred share that acts like a hybrid between a bond and a call option for the company's common stock, similar to Strategy's strike product, except it's 1-to-1 conversion right into common stock at 1,000 yen per share, as opposed to 10-to-1 like strike. This structure is incredibly powerful for Bitcoin accumulation because the dividend is only 4.9%, which is extremely cheap compared to Bitcoin's expected long-term CAGR. Essentially, the prefs are non-dilutive until conversion, and when they do, it would occur at a premium, which is 1,000 yen, not the current share price. It's effectively raising capital at a high MNAV multiple without the market needing to price the stock at that level today. I am feeling so bullish right now. Zinx is feeling so bullish right now. I am feeling so bullish right now. LIG. Life is good. And speaking of life being good, we have an incredible continuation of Michael Saylor's Schwab interview. So let's sit back, enjoy, and dive on in. Senator Cynthia Lummis recently announced that funding for a U.S. strategic Bitcoin reserve can start anytime. This is a massive step forward for a strategic crypto stockpile, and no surprise, was soon followed by a new all-time high for Bitcoin. If you're looking to buy more Bitcoin, BitIRA can help. In fact, BitIRA will help you convert an existing IRA or 401k into Bitcoin. This also allows you to buy Bitcoin using pre-tax funds, then continue to invest in it over time as you do any other retirement account. And if you want, you can even add XRP, Ethereum, or other cryptos. BitIRA protects your assets with end-to-end insurance, highly secure storage, multi-encryption, and is registered with the US government. Your IRA is fully IRS compliant. Best of all, you can trade crypto within your retirement account without incurring taxes on any buys or sells. Just go to bitira.com/JLD and request a free info guide. Once you do that and open your IRA, you'll get a free ledger. Think about this. In March, President Trump signed an executive order for the Treasury to manage 200,000 Bitcoin as the foundation for a reserve. That's just the foundation. Go to bitira.com/JLD to open a tax-sheltered IRA in Bitcoin. Fire Nation, when you want more for your business, more privacy, more guidance, more success, it all starts with Northwest Registered Agents. These legends have been helping entrepreneurs launch and grow their businesses for nearly 30 years. They're the largest registered agent and LLC service in the U.S. with over 1,500 corporate guides, real people who know your state's laws and actually care about helping you win. With Northwest, you can build your complete business identity, everything from what your customers see to what they don't, operating agreements, meeting minutes, compliance paperwork, and more. You'll get thousands of free resources, lawyer drafted forms, and step-by-step guides all in one place, and you don't even need to create an account to access them. Best part, privacy is automatic. Northwest never sells your data and handles everything in-house. Don't wait. Protect your privacy, build your brand, and get your complete business identity in just 10 clicks and 10 minutes. Visit www.northwestregisteredagent.com/JLD free and start building something amazing. Get more with Northwest Registered Agent at www.northwestregisteredagent.com/JLD free.
There's a lot of people that would rather have 10% after tax with 1/100th the risk, right? Yeah. And so that's a different class of investors. So we have rotated from the true believers to the hedge funds that, like, you know, the Millenniums and Soros and Citadels that wanted to trade and hedge the convertible bonds, to the credit investors that want long duration, sophisticated credit. And then with Stretch, it's just money market investors. I have some money, I just want more than zero, but I don't really want to risk the principal so much. And so that last set of investors are, you know, retirees, mainstream retail. I think we had $600 million of retail demand for our Stretch IPO in 2 days. So in 48 hours, we had $600 million of demand, and that was an order of magnitude larger than the retail demand for our other instruments. So right now, this is migrating to family offices, retail investors, high net worth individuals, and of course fixed income investors like PFF, which is like BlackRock's preferred fund. I think like 3.5% to 4% of that fund is invested in our credit instruments, which didn't exist 12 months ago. So we're now starting to move into credit indexes. Of course, you're a credit investor, you have to buy credit. You're an equity investor, you have to buy equity. We're also in equity indexes. For example, our biggest shareholders are Vanguard and BlackRock through their passive equity index funds. So there's a lot of pools of capital in the world. Some of them, if you lived in Africa and you needed to flee the country and you didn't trust your bank, I would say buy Bitcoin, put it on your own hardware wallet because you can't trust the bank.
Right.
But that's one class of Bitcoin investors. But if you're an investor in the United States and you have pools of capital earmarked to equity or credit, then you probably want something created by a company like ours.
Mm-hmm. There had been a view out there that crypto was uninvestable without the regulatory framework and guardrails in place. But we have seen these sort of legislative wins, as you mentioned, and we still got to 100,000, to your point, without that. I'm just wondering, talk us through Strategy's involvement in the latest legislative efforts now to really regulate and create those guardrails and construct the infrastructure for everyday people to understand and access and have that exposure to crypto.
If you look at the digital assets industry today, you can divide it broadly into two segments. One segment is digital capital, and that is Bitcoin. It's dominated by proof of work networks. Bitcoin is 99% of all the energy and all of the capital on that side of the industry. And digital capital means digital gold, and that means, I want to buy something without counterparty risk and hold it for 100 years. And what do you do on top of gold? You issue credit. For 300 years, the Western world ran on gold-backed credit. All of our currencies, all sovereign debt, all corporate debt was, in essence, a form of gold-backed credit. So the part of the industry which is most traditional and conventional is digital capital, digital credit, all basically centered on Bitcoin and Bitcoin treasury companies, and that's what our company Strategy does. The other half of the industry is digital finance. And that is all about tokenizing currencies, tokenizing securities, stocks and bonds, tokenizing real-world assets, tokenizing brands, right? It's Joe Rogan token, right? It's a meme coin, but it's also the dollar, right? It's also a stable coin. So that opportunity is, why don't we create $10 trillion worth of stable coin and export our currency to the world and move the money at the speed of light and let the computers trade with themselves 1 million times a second? Why not? What's the second best? There is no second best.